Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. This is my equity conversation of the day, so I'm going to have it immediately on the podcast, Single Best Idea, which we'll get out here in a number of hours. Julian Emanuel, you and Ed Hyman are sitting around having a morning tea. He's got that black pen out. He's trying to get your white shirt dirty. You're writing up the Ed Hyman Evercore ISI note. What is the surprise of Hyman and Emanuel in the last 90 days? Ed Hyman is rarely surprised. What's been the surprise?
I think Ed has been surprised by this stickiness of inflation. And if you think about what the Fed's narrative has been since the December pivot, you should be surprised by it because it doesn't make sense with that conversation with any precedent that we are familiar with regard to inflation. Ed still sees the trajectory. As you know, he's been aggressive and early on the inflation falling story. He thinks this is just a bump in the road, but likely takes that sort of getting to that last mile, a weaker economy in the second half.
All right, so Julian, for this market here, as long as we can remember, tech's been leading this market. Big tech's been leading this market, upward and downward if you think about that 2022. Can tech still lead this market going forward?
Well, tech can still lead the market, but what we've seen over the last several weeks in particular, but actually this goes back a number of months, is record dispersion among stocks. Think about it, right? Before the bear market in 2022, it was called FANG.
Yep.
Then when we started turning in 2023, we got to the Magnificent Seven. Now it's ostensibly really only the Magnificent Four. And what troubles us when we look at the second quarter expecting more volatility is that Magnificent Four is starting to look a little less magnificent in
But to be
weeks.
clear here, this is the hallmark of you and Ed Hyman. You're in the market. I don't hear go to cash.
Oh, yeah, no, absolutely, absolutely not. Look, this is one of these times again, and you know, you go back and you think of the times where there may have been emotional reasons, there may have been stress reasons, and March of 2020 is the perfect example.
Oh, I was thinking October of '86, Lenny Dykstra's home run in Game 3 for the Mets. The ball has never come down. It went over Everett and was lost over Marblehead. I mean, what the Mets did in 1986, we've never gotten over.
I'm staring at your Red Sox jacket, Tom, and all I can say is Bill Buckner, and I knew you were expecting to say that.
I didn't. Doug Cass is out here, so we'll move on. Brammo walked by with a white sign, Bill Buckner, it's opening day. Paul, save us here.
Julian, you and your strategist brethren on Wall Street, I see you guys tripping over each other trying to keep raising your year-end targets for 2024. How are you thinking about valuation here? Because
this is the arch question.
You know,
Paul, this is the single best question out there.
We're taking a different tack here, Paul. Okay, and it is earnings and valuation driven, as it should be. Now, I will say this, is that my focus on valuation has been unlike anything I recall in my career. Frankly, I was managing money in Y2K, so that's why. The first thing we have to do is step back and say the market is exuberant, but it is nowhere near irrational. 28 times what you saw in Y2K, which would imply 6,200 or so in the S&P,
wow,
is exuberant. But from our point of view, with the accumulated sort of perfection priced in and the possibility that the Fed isn't going to be able to deliver, and that 11% earnings growth, which has been basically the baseline for the last couple of months, has downside, as we think it does. The way you want to think about this is, how do you stay in your core positions with perhaps a tilt towards defense and not get scared? Because the history of making subpar returns in investing comes from selling into down markets, as opposed to just sort of thinking about how you position when things are good as they are now.
Do we still chase this market? I mean, if I chase this market, I feel like, and I'm Joe portfolio manager out there, Joe investor with my 401k, I feel like I have to be in those magnificent 4 or 5 names, whatever they are.
Well, so actually the amazing thing is the options market this is one of these very rare times where you're allowed to have your cake and eat it too. Because the combination of this incredible retail investor FOMO, remember, the market is being moved in large part by 0 days to expiration options trading on the part of the public, where you control $1 million worth of stock for less than $10,000 and the position closes every day. That kind of FOMO and 5% interest rates give you the ability to stay in those Mag 7 names, but actually have downside protection.
Julian Emanuel, I think he's trying to get me to make my first trade. Thank you so much. With Evercore ISI, we'll get him back here for a much longer conversation in the coming days. A little window into the childhood of Tom Keene. It was a twisted and strange childhood. I would read the Wall Street Journal the day after. I would sit in a pretty fancy dining room, and my father would read today's Wall Street Journal, and I would read the one before, which was folded up neatly and with engineering blue and red pencil, and probably with an Oberlin napkin on it from my mother, would be underlined centrist political theory. And it started with Scoop Jackson, HHH, Ed Burke of Massachusetts, and others. Nobody has driven the centrist conversation forward like Richard Haas, serving multiple presidents, multiple parties. And Paul, there is a conversation with Senator Joe Lieberman of Connecticut, where Haas is impossibly young in 2004. And we are so honored today to bring Ambassador Haas on to talk about our modern centrist, Joe Lieberman. Boy, are we starving, Richard Haas, for centrist politics.
We are. I have this vision, Tom, that it's only a matter of time before the post office issues a stamp, and it's a series of centrists, and it basically has a thing, endangered species. And Joe Lieberman was one of the best.
I look at his politics and his courage at the time, and a lot of heat and critique of moving left to right. Do you have a tendency now to see people from the polarized right moving to the center, or is that a fiction for another day and age?
I think it's mostly a fiction for another day and age. Most of the incentives or pressures in American politics, from money to political support to attention, is to move, if I may use a football metaphor, on this opening day of baseball, towards the end zones rather than the middle of the field. It takes a lot of guts. It takes often a willingness even to lose. If you're going to put country before party or your own personal ambitions, you've got to be prepared to lose. And I haven't noticed, Tom, a whole lot of people who are prepared to.
Richard, there's so many hotspots around the world we could benefit from your analysis here. Let's start with the Middle East. I know you've had recently someone's perceived as a radical plan, a radical suggestion for President Biden about how he should deal with Mr. Netanyahu as it relates to what's happening in Gaza. Can you share that with us?
Yeah, what I've basically been saying is he doesn't have a partner in this Israeli government or this Israeli prime minister. All of his efforts at persuading them haven't amounted to much of anything. So he's got to go over their head. He's got to speak directly to the Israeli people about Israel's future. If it wants to remain a secure, prosperous, Jewish democratic state, it's got to choose a different path in Gaza. It's got to choose a different path in the West Bank. And I even suggested he go to the Knesset. Do it from the floor of the Israeli parliament. Take a page out of Bibi Netanyahu's book, who came to Washington, spoke from the Congress to speak against the Iran nuclear deal. But I don't quite care whether he does it from the Knesset or not. I think, though, what we're actually seeing is the administration is moving away from a policy that's predicated on persuading Bibi Netanyahu, and they're dealing much more with a policy that's either independent. We're going to provide aid. We're going to veto this resolution or introduce our own, and essentially pressuring the Israeli government. So I think it's a healthy change.
What is the status of Netanyahu in Israel right now? Does he still have the support given what's happened over the last several months?
Yeah, I mean, the polls show he's quite unpopular, but there's only two ways to remove a sitting prime minister, and that's through a parliamentary reshuffle or an election. At the moment, I don't see a parliamentary reshuffling coming about. It's not clear to me that his current coalition partners want to dump him, not because they love him, but they love being in power. And at the moment, there's not a mechanism to get from here to new elections. It's possible the government could be brought down on any number of issues. If you remember, before October 7th, the dividing issue in Israel was about the role of the courts in democracy. Now there's big debates about whether the ultra-Orthodox ought to be conscripted. So there's lots of ways, lots of fault lines in Israeli politics. Right. But at the moment, like it or not, Bibi Netanyahu is prime minister.
Ambassador Haas, we stagger into April. We have a clear image, a history of a lame duck Congress. Can we have a lame duck State Department, a lame duck foreign policy?
I think that's too critical because most foreign policy doesn't travel through the Congress. I mean, the Ukraine situation, the funding there, Tom, is in some ways different because, again, it requires congressional approval. So there, the real issue is what does the House of Representatives do? What do the Republicans do? But I think in the Middle East, with China and so forth, like in a lot of other areas, the presidents enjoy a lot of discretion, a lot of latitude. So I don't think it's fair to say that, even though the State Department, to be honest, is a weak duck. Most of the energy now in American foreign policy doesn't come from state. I would say the lion's share comes from the National Security Council, or in some of the issues you talk about on this show, I would say even the Commerce Department counts for a lot.
I don't want to get into your personal knitting here in your 48-hour day, but he's working 7 days a week.
There's no slowing down here.
Did any of the CEOs that greeted Mr. Xi in China, did any of them get a Haas briefing? And if not, how do you brief CEOs on confronting the new China?
They did not in this case, though I spend a lot of my day, given my new life in Centerview, talking to CEOs. I think China's probably the single most frequently raised issue. Tom, look, Xi Jinping is courting CEOs. He did it in San Francisco in November, if you recall. He's doing it now. He is hoping that American CEOs essentially become all lobby for what China wants in the U.S. relationship, which essentially is fewer tariffs, lower tariffs, lower constraints on investment, lower constraints on trade. And he's hoping that he can essentially get them to press the government to ease up on China. That's why in 2024, that's what China wants in 2024. What the Biden administration wants is no new hotspot with Taiwan or North Korea or anything else. But no, that's what this is about. And I think American CEOs need to understand that anything to deal with technology is going to be constrained with China. And if there's a crisis over Taiwan, nothing is immune from political pressure.
Richard Haas, thank you so much, particularly those comments on Joseph Lieberman of Connecticut. Anna Wong, she's head of Bloomberg Economics. Anna, what will you listen for from the chairman? Is this a speech of substance or is this a nuisance?
By that, I assume you're talking about Powell?
Yeah.
Yes. Yes, I think right. So since the FOMC, we have heard the most important speeches so far has been Waller. And we heard from Waller, who is the more hawkish side of the FOMC, saying that while the FOMC is not overreacting to the hot inflation prints in the first 2 months of the year, they must react to it. And I think that is the message that will come through in Powell's speech, that they will be taking a very cautious approach to and deliberate approach to interpreting the inflation data. That said, tomorrow we are also going to get the core PCE inflation data. And if Powell and everybody on Wall Street is right, then it's going to come in at 0.3% for core PCE and 2.8% for year over year, which is the okay inflation number.
And Anna, we had some look back economic data today. The GDP number for the fourth quarter came in revised higher, 3.4%. The survey was 3.2%. We also had continuing claims kind of right in line with expectations. So anything that we received today, economic news-wise, alter your opinion at all?
Yeah, I thought the most interesting data today is the GDI. So GDI grew at over like 4.8% in real terms in the fourth quarter. And as you know, GDI is supposed to be equal to GDP. Yet over the past 2 years, one of the biggest puzzle in economics is that they are not. And GDI has been consistently running below.
Anna, can you define GDI for me, and I'm guessing some other listeners and viewers?
Yes, so GDI means gross domestic income, and it measures the income side of things. So it's supposed to be wage compensation plus firms' profits plus government profits, that would equal GDP, which measures the expenditure side of things. So what we saw in the very, very strong GDI number for fourth quarter is this big pop in firm profits. And drilling down into, so there's a 13% increase on net operating surplus of firms. And drilling down, it turns out it's a category called dividends and business current transfer payments that rose by 30% on a quarterly seasonal adjusted basis in the fourth quarter. That drove this gigantic pop in GDI. And what that means is it's the stock rally. So I think the stock rally and easier financial conditions in stock market in the fourth quarter is starting to really show up in hard data. So we saw that in GDI today, and in the personal income report that comes out tomorrow, we will be paying attention to also the line item called personal dividend income.
You sound like Alan Greenspan of 30 years ago. Anna Wong, simply here, are we going to get a nominal GDP oomph that supports revenues of corporations in America?
It does look like that was happening in the fourth quarter. Perhaps that was the fundamentals that's driving the stock market rally.
Okay, Anna, thank you so much. Dr. Wong is head of all of Bloomberg Economics in America. Your daily look at the front pages around the world. Shout out the Globe and Mail in Toronto.
Really?
On point yesterday with a speech by the Deputy Governor of the Bank of Canada in Halifax, that's out east.
Yeah, wow.
And she ripped apart the Canadian productivity story. Oof. She tore it. I've never seen a speech like that in America. Wow. She tore them. People were really upset about it. That's your front page look from Canada. I did an audible there, and Lisa, I didn't mean to get out in front of the Globe and Mail. What do you start with, Lisa?
That's okay, and welcome back, by the way. Thank you. So we're starting with, this was like our top story today. Longtime Connecticut U.S. Senator Joe Lieberman passed away yesterday. He was 82, complications from a fall, but the reaction from friends and from rivals, they are just starting to pour in. So I wanted to get to a few of them. You had Al Gore, the former vice president, who chose Lieberman, at his running mate during 2000 election. He said it was an honor to stand side by side with him on the campaign trail. Then you have former President George W. Bush. He was the victor with Dick Cheney, over the Gore-Lieberman ticket. He said in both loss and victory, Joe Lieberman was always a gentleman. And this one I find, I really enjoyed this one. Senator Lindsey Graham of South Carolina, he was close to Lieberman and Senator John McCain. They called themselves the Three Amigos. He said, the good news is that he's in the hands of loving God. He said, the bad news, John McCain is giving him an earful about how screwed up things are. And he signed that statement as the last amigo.
Got to know him a nice amount here. And what is so important, particularly for younger people to understand with Senator Lieberman, is this was a throwback, Lisa, to what was normal. Yep. You had Mario Cuomo. You had Scoop Jackson. You had HHH, Hubert Humphrey in Minnesota. And Joe Lieberman was the centrist, became far more centrist here from another time and place. And what's so sad, Paul, is his politics is now odd.
Yep.
And singular.
I mean, you think about him and John McCain, two ends of the spectrum, but you could just absolutely see them after a day in having a cocktail together.
Right. Yeah. What else do you have here?
Sure. This was an interesting read from Politico. The Baltimore Bridge design, they're saying it likely contributed to that loss of the bridge. So the collapse, they're saying, could have been avoided if it had this simple fenders, that's what they're calling it. That could have been standard issue on new bridges since the 1990s. So it's installed around the supporting beams. That's what these are. Because the ships are getting bigger, and that's the issue. You had the Dolly. It was 1,000 feet long. It had tons and tons of cargo on it.
Well,
in the
Paul
1970s, it's changed.
How many cargo things were on top? I mean, 10, 12, 15 stacked up?
high. Yeah, I don't know how that works. I don't know how they stay afloat. I don't know how they don't flip over out in the open sea. It's just extraordinary. But I can't imagine designing a bridge to withstand a ship running into it.
Right, and that's the problem. The ships weren't as big back then when these were designed. The fenders were started back when the bridge was designed, but
that makes some sense.
But they just didn't put them on them this time.
What else?
Okay, so this is from TechCrunch. LinkedIn, something different you might see on LinkedIn. They're having short form video, so similar to TikTok. So a lot of people are starting doing, Instagram, YouTube, Snapchat, Netflix. They all do these short form videos. So here's where you find it. If you go over to LinkedIn, it's in their navigation bar, this new video tab, and then when you click on it, you start seeing this little feed of all these short form videos that go by, and you can swipe through it, you can like it, you can comment, you can share it. So it's very similar to TikTok. How it can be different for LinkedIn is the question. I guess you have to focus on careers and professionalism. But I don't know, Tom, you got to start working on those short form videos.
This is an untold story within social as Microsoft took over LinkedIn. And I would suggest as an amateur that very quietly they have changed it. I would editorialize they've improved it. And it's shocking the difference in flow now between LinkedIn and Mr. Musk's X.
Yeah.
Which I still call Twitter.
Which you still, yes.
But they're going to TikTok LinkedIn? Is that what you're telling me?
It's all about video, short form video.
It keeps people entertained. You just swipe
YouTube's
through
doing it as too. They would, we're thinking of doing Paul Sweeney short forms on YouTube.
Sure. Yeah, why not?
That would be fantastic.
Monetize.
What else do you have?
All right, finally, we're working less on Fridays than we used to. No shocker here, but so the rush hour is back in the midweek, right? You have everything buzzing, but on Fridays, it's a little bit quieter. Sometimes a ghost town, a lot of people working from home.
Don't get me going.
But here's the study. It says that the average worker now signs off an hour earlier on Friday, so that's what they're starting to see. But they're saying it's okay. They're giving the green light, the thumbs up, because they're saying it helps with productivity. People are taking it easier, so it supercharges them. It gives them an extra boost. They're happier. But that's what they're seeing.
I've given up. So I've given up, and I'm flex all you want. Just keep the productivity.
I'll say this: the productivity of France is about equivalent to the United States, and they work a lot less. There is something to what you just said, Lisa, that somehow if you work less, you get the same or more done. That's what the academic says.
Interesting.
I'm really torn here. I'm really troubled. What I will say is with all the technology, maybe that marginal 3 hours on Friday, Paul, is a weekend effort.
Yeah. I mean, I don't know. You've said it all along, Tom. Companies adapt, people adapt, systems adapt. And maybe that's just kind of what we're doing here, adapting.
Then why are we all here 5 days a week?
Yeah, exactly.
Well, it's picking up as we talk. You see people passing by here outside.
It is picking up.
Not right now, but there were people before going through.
Thank you, Lisa Mateo. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.